Welcome to Edison TV. I am delighted to be at Foxtons HQ with their CEO, Guy Gittins. They've just had a Capital Markets Day. We're filming this on the 5th of June. Talk to me a little bit about the journey and why you set out new financial targets for the business.
Well, I returned to the business in September 2022, and really that first part of the story was a rebuild story. I joined a business where we'd seen market share really decline certainly since 2016, and the business really needed new energy. We came in and at the start of 2023, we produced and presented an entirely new strategic plan for the business to the city, and that plan initially was delivering 28 to 33 million pounds of adjusted operating profit, and we were going to achieve that by shifting the focus of this business from what was historically very much a focus of sales, now very much focusing on the growth and the opportunity within lettings. And we love lettings for many reasons, but we particularly love it because it's a really beautiful reoccurring revenue stream. It's very, very resilient, and certainly as we've seen coming through events like COVID and the global financial crisis, that the predictability of that income is fantastic, and it's been such a wonderful growth area for us that we're really excited, not just about delivering that first part of the plan, which is now very much within touching distance within the next 12 to 18 months, but actually this was about getting ahead of that and now looking even beyond that horizon and looking at part 2 of the story, which is what we've laid out in the Capital Markets Day.
What are the new financial targets, and what kind of timescale are you hoping to hit them?
So as headlines, the most important one is our profitability, and we're driving that from part 1, which was 28 to 33 million of adjusted operating profit. Part 2 of the story, which we've announced yesterday, is now moving towards 50 million pounds of AOP, and we will deliver that along with around about 140 million pounds plus of revenue, and we're moving and improving the profit margin from around about 14% today up towards 20%, and we'll be doing that, of course, by looking majoritively of that will be coming through acquisitions. There's a wonderful consolidation opportunity both within London and the surrounding commuter belt locations, delivering great organic growth, and I think certainly the last 2.5 years we can point to some of the strongest organic growth in the market, and delivering a big uplift in terms of our market share as well. And actually we're really proud in the last 2.5 years we've become the fastest growing UK estate agency, which is quite an achievement for a large agency like us ourselves. And we've moved from around about 3% market share for sales and lettings up to 5 or 6% for sales and lettings today. And we've done that through really starting to get value out of this enormous database that Foxtons has been collecting over the last 20 years. And that really is something that's very, very different to the majority of our competitors. The size and the quality of the data that we've been collecting. There's over 1.6 billion data points in our database. And if you can imagine 20 years of viewing history, buyer and tenant journeys, that granular level of consumer behaviour that we'll start now to get value out of when we start to use AI plugins, I think will really take us into the next level of our journey.
So what is the underlying strategy effectively to hit that next phase of growth?
Well, let's look at the 3 different aspects of our business. We have lettings, we have sales, and we have financial services. So if I break it down into those different tranches first, lettings today is the most important and largest aspect of our business, and that's been a deliberate shift over the last 2.5 years to grow that reoccurring, very consistent, very resilient income. And we've done that, as you've heard, by 2 ways, both through organic growth within the existing business, but then supercharging that growth with acquisitions. And really, the next part of this plan will be delivered by an evolution of the part 1 of the plan, is making sure that we continue to deliver on both of those aspects. But this new plan also includes us going further afield. Traditionally, we've been an agent that's focused very much on London. Part 2 now is opening up entirely new markets in high value, high volume commuter belt locations where we can buy high quality lettings businesses and bolt them into the Foxtons platform and get those great synergies that we talked about earlier. So that's for lettings. Then for sales, this business for the last 3 or 4 years has seen, and London has seen, very low volumes of sales within the M25. mainly because of the increases in interest rates, thanks to the September 22 mini budget. That's really subdued sales volumes. And what that's meant is that our sales business has actually been loss-making, but this is a rebuild of that. And it isn't easy to get a large sales business back to profitability. But actually, we're really close to doing that. And we know that in the next 18 months, even at these subdued volume levels within the market, we should be very close to that. So that's been a major focus. Part two of the story for sales is then growing the profitability of that department from a loss-making position, which we're really confident that we can do. And we'll do that by continuing to take huge market share. And we've seen that growth already being the largest in the market across the whole of the UK. And we will continue to grow on top of that and take larger volumes. We know we can't save our way to profitability in sales. It's got to be about growing market share. But also, if we could just slightly increase our average sales price. Now, in fact, our average sales price has been completely flat in London for the last 4 years. I mean, the spread is incredibly tight. But if we could just increase that average sales price by £50,000, that would add millions in additional profitability over the next year, over the next phase of growth. So that's another part of the growth story. And then the last piece is, of course, financial services. We own a business called Alexander Hall, and they provide mortgages to our buyers. And it's a really fascinating business. And I think perhaps over the next 5 years, we're going to see a slight evolution of the business model there. There's the traditional employed broker under the Alexander Hall umbrella model, which is well proven and has been in place for many years. We have a new model which we're launching and we talked about at the CMD, where we will be able to scale up slightly quicker to take the advantage of the market opportunity that we're delivering from the rest of the estate agency, and whether that be front office sales opportunities where people are buying and need a mortgage, but also our investors in lettings looking to remortgage their portfolios and things like this. So they're really exciting for those three aspects of the business as we grow into the next phase of our plan.
You touched on elements of what makes your business different. How does your operating platform support this growth in the strategy for growing? And indeed, what new upgrades are you giving your operating platform that people should look out for?
Well, the operating platform at Foxtons is almost entirely unique, and we believe it's also almost entirely impossible to be able to replicate. And the beauty of this is that 20 years ago, this business invested a huge amount of money, time and effort in building its own CRM. And that CRM today covers every aspect of the business. This is a unique, singular system that talks to each other. It's complete visibility across everything that we do. And that generates huge efficiencies, not just from an operational efficiency, but also from an output efficiency, because we have created over time very highly efficient siloed departments, and those siloed departments are really, really good at the one thing that they focus on. And actually, we've had a tour around head office today with your team, and we've seen some of that in action. And the prospecting, we have 100 people here who are prospecting, getting into that database of 4.5 million people using AI to power the propensity modelling of who we should be calling. And the old-fashioned way up until 2 years ago was, we generate a list of a street name and we'd call everybody from A to Z and hope that we might find somebody that was interested in doing something with us. Now we're looking and using those 1.6 billion data points. We're using the 4.5 million contact points. We're also ingesting huge amounts of external data, and those algorithms are helping us in the background propensity model that information and say, rather than calling 100 people on a random list, here's the top 10 that you should call, because we know they're factually much more likely to do something than the other people. And that's really helped us grow that market share. And the proof point of that is being the fastest growing agent in the UK over the last couple of years. So that's one area, obviously the CRM. The data that powers it, it's all very well creating a fantastic CRM, but you can't power that without the data. And I think when we're now looking into the future, we've built over the last 2 years a state-of-the-art Azure platform. We've built it in conjunction with Microsoft to make sure that it's future fit for as far as we can see ahead. All of that cost and investment has already taken place. And those AI plugins that we can't even imagine today that might be coming on stream in the next 6 months, a year or 2 years, are ready to be actioned straight away. So we're constantly out there thinking about ways that we can use that historic database, thinking about those insights that historic journeys have shown us over 20 years to really be able to power forward. So we're really, really excited about the data platform. And then we've also got the UK's most recognisable estate agency brand, despite only really operating in and around London. It's remarkable if you think about it, and that's YouGov information. And that brand allows us to be able to go into new markets and command and capture really good market share. It also helps us deliver a really premium fee over the vast majority of other agents on the high street. We know our average fee today across, if you look at sales, for example, we have 8,600 properties on the market today, which is a considerable margin over our number 2 competitor. We've got almost all of those units are at our premium fee of 2.5%, and on average over all of them it's 2.25%. We know that fee is probably double that of our closest competitor. So and we're able to command that because of the reputation of the Foxtons brand for delivering results, and also that brand recognition. So brand is also really important to us, and of course people, culture and training. The people are the most important driver of a business like ours, and I don't think any technology that's coming on stream, in my working lifetime is going to replace in a state agency that person-to-person relationship, and that is so important. So we are constantly looking to try to find ways of engaging with people who want to come into the industry. We've rebuilt our employee value proposition over the last 2 years, and we're now bringing and talking to lots of university courses. We're really integrating and working with university courses to capture a different calibre of new starter and bring them into the business earlier, and then train. And as you heard earlier on, we're delivering a tenfold increase in face-to-face training over the last 2 years since I've returned to the business. And what that's doing is it's helping us make our new negotiators and new team members productive much earlier on in their journey, so that they're earning more, that they're more productive for the business, and ultimately they can see that progression much quicker. So that will always be a key driver for a business like ours, and it's something that we're pleased with the progress. But ultimately, like all businesses in the modern world, culture within the business and what we're doing around the people piece is really important, and it's an always on constant journey to move forward.
Those are fantastic sort of elements of, I guess, the moat. You've started to sort of expand outside of London. Where are you looking to build further offices, and why?
Well, ultimately, London will always be the core location for Foxtons. We've got a fantastic reputation. We've got lots of offices here already, and we have a brilliant business. What this is about is the next layer of growth for Foxtons. And if you just take London on its own, we've calculated that we believe that the total commission pot available for everybody, the total addressable market for sales, for lettings and financial services, the 3 aspects of our business, today, London's market is around about £2 billion of commission opportunity per year. By going out into some of the closer commuter belt location, then we believe that we're expanding that now up to £3.5 billion. So it's a really considerable opportunity for us. And we know that there are great quality lettings businesses out there in commuter belt locations where we can see, because of the data, that there's high volume and high value lettings businesses that operate in these key locations that we would love to be talking to, acquiring, bringing onto the Foxtons platform, keeping all of those brilliant people, and really supercharging, as we've done with the businesses such as Haslam's and Imagine Property Group over the last year as well. So big opportunity for us.
You had your Capital Markets Day yesterday, where quite a lot of this vision was sort of outlined. To summarise it for people who didn't attend the Capital Markets Day, what are the sort of key messages that investors should take away from the Capital Markets Day?
I think the renewing of the medium-term targets. We're well underway now of having doubled the profitability in the last few years since I returned to the business, which we're really proud of. This is about how we then double it again in the medium term. And we've got a very, very defined plan. We've got a very, very proven playbook, having already doubled the profitability of the business and delivered that growth in stage 1. And this isn't really a revolution of that story. It's simply an evolution of those same principles that we know that we can deliver and that we've proven that we can deliver already. And I think I've got the team, we've got the brand, we've got certainly the tech and the data behind it. And we know that we've got the best people in the industry to go and deliver this plan for our shareholders in the medium term.
Guy, it's been a fascinating run through the business. Thank you very much for coming on Edison TV.
Thanks for your time. Really great to have you here.
you.